you so much for joining today's webinar. We're going to talk about how you can identify and overcome profit problems in your business using cost control strategies, automation, and smarter financial management. By the end of this session, you'll have actionable steps to provide better profitability in your business, plus real-world examples you can implement immediately. So I'll take it through a little introduction. I know Melissa just touched on this, but I'm Allison. I'm the CPA and Operations Manager at ledgerlabs. I'm thrilled to be here with you today to talk about real-world strategies for improving profitability in your e-commerce business. I'm joined by Gary Jain, the founder and CEO of ledgerlabs. Gary's been working with the e-commerce brands for years, helping them navigate the challenges of scaling sustainably from high operational costs, manual processes, to cash flow management, mismanagement, and data disconnects. He's seen it all, and he brings a sharp lens for finding the root cause behind profit, right into the problems that we see our clients face in the e-commerce space. The biggest one being profitability. No matter what the size of the business is, whether they're doing $20K or $2 million a month, I hear the same question. We're growing, so why don't we have more money in the bank? Are we overspending on ads, or is our CAC still in range? Can we afford to scale the next quarter, or will it break us? And so on. These are symptoms. The real causes, they go deeper and they vary from business to business. But I'll walk you through the most common causes that we see at ledgerlabs. Number one being high operational costs. We've seen plenty of brands slowly lose margin without even realizing it, often due to hidden costs in their shipping and their warehouse setup. One big culprit is they rely on third-party logistic providers that aren't optimizing their needs. Once we clean that up for them, their profit leaks start to disappear. Another issue, manual disconnected processes. We've worked with teams buried in spreadsheets, spending hours reconciling data between platforms. But once they automated those workflows with the right tools like Cinder, they finally got their time back and stopped chasing errors. Another being low visibility into financial data. If you don't have real-time dashboards, you're basically flying blind. We see a lot of founders lead their businesses by feelings instead of based on the data of the business. Another issue is cash flow mismanagement. Revenue might look good, but if your cash isn't moving, the business still suffers. We've helped clients uncover where their money is stuck, often in inventory, and free it up by smarter purchasing and vendor decisions. Two other issues, over-reliance on founders and lack of forecasting and modeling. The point is that you can't fix what you can't see. These problems aren't rare. They're everywhere in the e-commerce industry. But once you identify which ones are affecting your business, that's when you can start treating them. So speaking of that, let's take a look at an example. So what does it look like to go from all these scattered symptoms to a clean, controlled, profitable financial operation? Let's walk through the real example of how we solved an issue for one of our clients. In this case, the client was managing customer invoicing and the contractor payments manually in QuickBooks Online, with multiple team members involved. The client was a talent management agency where they were being paid by brands directly, and then they were in charge of paying the talent minus their agency fee. They only paid the talent after they were paid by the brand. So they used to put data in Google Sheets to track their sales effort. Then they used that data to create invoices. Then they used to apply the payments as they hit their banks, sometimes confirming with the sales team as it wasn't clear what the sales team had written in the spreadsheet. Then they used to check which talent was hired for what particular client and campaign. Then they created bills in QuickBooks, checked all the open bills, and verified which ones are to be paid. Then they went into another system, bill.com, to create the bill again, and then send the approval request to the owner. Then the owner approved, and the payment was processed. It involved 3 different systems, multiple team members, and a lot of areas for human error. So many times the payments were processed incorrectly due to calculation errors, and the incorrect people were paid or left unpaid. There's so much effort and a mess for a simple, repeatable task. Now, most businesses we work with face these kind of issues, and that's exactly where having an automation-first mindset can make all the difference. It's not that your team is incapable. It's that the system that they're relying on is broken, and until that's fixed, you'll keep second-guessing your numbers, your decisions, and your teams. We replace that fragmented workflow with a clean, automated process, powered by Make.com and connected it to Google Sheets, QuickBooks Online, and Bill.com to make one collaborative working system. And guess what? We reduced the weekly hours spent on this process from 35 to 40 human hours a week to almost 6 to 7 per week, which you can imagine was a huge relief to the client. So here's how the system works.